There's a couple of things going on here. One of which is Jevons paradox, which is, the more, the less expensive that technology becomes, the more the demand is. So the DeepSeek news for us was interesting in that none of the hyperscalers who knew about this before the announcement, Meta had already set up war rooms. So none of them pulled back on their CapEx budgets. And in fact, most of them doubled down or increased their CapEx budgets. So we expect to see about $310 billion of CapEx spend. It's funny how you can mix up billion and trillion these days. $310 billion in CapEx spend this year just from the hyperscalers alone. That doesn't include the recent announcement we got from Apple. So I think what we will see is that there will continue to be demand. CIO budgets, or chief technology budgets, are really not broadly reflecting AI spending. In fact, about 8 to 10% of CIO budgets are allocated to AI, but growing. 80% of chief technology officers will tell you that this is a super important aspect of their future growth. So add to that, lastly, that we track, for the companies with AI, by the way, the companies that we own, and what we're seeing is exploding use cases and monetization of AI across industry sectors. And so I think we will continue to see that play out.
So, Nancy, even if we do see some caution from Nvidia on the capital spend, does Nvidia remain the premium name in the sector, and does it remain a core holding?
I think so, Sri. I mean, what we know is that there's a huge backlog on the Blackwell chips, so about a year's worth, and the demand is increasing. Nobody wants to get out of line. So what I think you'll see tomorrow is the company will beat, and they will raise, and the question is, they will raise guidance, and the question will be, is it enough? But earnings growth in this fiscal year expected to be around 50%, and the stock is trading around 45 times. So on a price earnings to growth ratio basis, it's pretty cheap. I mean, Tesla a few weeks ago was trading at a 4.5 peg. So I think this is a name you want to own and add to. If we get a sell-off, you want to add, and if we don't, I think we're off to the races again.
How are you thinking about, though, the White House's plans to restrict Nvidia chip exports to China even further, and in fact working with allies to do the same thing? How do you factor a price that into the equation?
As in Trump 1.0, Martin, I try not to think about the White House because it drives a lot of volatility in the short term. But I do think, I think it's a risk, clearly. But I think, what we saw from Apple was a very astute move, right? Tim Cook went and met with the president and then came out and said, we're going to spend $100 billion over 4 years, by the way, coincident with President Trump's term, and we're going to hire 20,000 workers. I think you'll see Nvidia navigate some of this. I don't think we're going to limit the short or the low-end chips. I just don't. I could be wrong. But I think what this White House does and this president is there's a lot of threats thrown out there, and then we land somewhere in between.
Despite some investor concerns, Evercore ISI and Piper Sandler have maintained their bullish outlooks, putting Nvidia in the limelight ahead of its Q4 reports. Nvidia remains a buy into the print, according to Evercore, which reaffirmed its outperform rating and $190 price target. Although analysts expressed concerns regarding potential Blackwell GPU delays, DeepSeek's AI rivalry, and a slowdown in hyperscaler expenditure, they think a strong earnings beat and encouraging forecast might serve as a catalyst. Similar to this, Piper Sandler anticipates that Nvidia will nicely beat projections. Strong demand for Blackwell GPUs was noted by the company, with supply chains getting better and hyperscalers increasing capital expenditures. Given that Nvidia is still sold out for 2025 and could post better earnings results later this year, Piper maintained its outperform rating and $175 price target. Wall Street anticipates Q4 earnings of $0.85 per share on revenue of $38.16 billion. Nvidia's earnings call will be important in determining the tone for the future because of the ambivalent feeling around the stock. With optimistic assessments from research firms Evercore ISI and Piper Sandler, Nvidia takes center stage ahead of its fiscal fourth quarter reporting. Nvidia stock stays stable during pre-market trade as experts highlight possible short-term dangers and catalysts. Analysts at Piper Sandler predict that Nvidia will surpass quarterly projections and return to the $2 billion guideline beat range. However, they claim that massive hyperscalers that add substantial capital expenditure are responsible for the high demand for Blackwell and the better supply conditions. It is anticipated that earnings will reach $0.85 per share on $38.16 billion in revenue. Nvidia may experience momentum in the run-up to its Q4 earnings report, given its positive comments and price of 30x PE. Evercore rates Nvidia as outperform with a price objective of $190, 12% above its last trading level and 12% above its recent low, but the company continues to lag the S&P 500 by 7% over the last month. The analysts also include a slowdown in hyperscaler spending, delays in the Blackwell architecture, dampened AI demand from the DeepSeek rollout, and possible shifts in AI compute cycles from NVIDIA GPUs to ASICs. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
First, some history. A little-known graphics company and gaming chip maker called NVIDIA invents a semiconductor that both enables accelerated computing and generative artificial intelligence. The kind of AI that knows when you buy a book about the Battle of Khe Sanh in Vietnam, that shows you 4 other books you might want to buy about that terrible war. Or when you ask Alexa for Tchaikovsky's Second Violin Concerto, like I did last night. Oh, no, it actually put on a Prokofiev symphony instead. All right, no, bots are perfect. This semiconductor becomes the backbone of electric vehicles, of robots, and most important, of the data centers themselves. Consider them barns with brains, huge warehouses full of servers. No large tech company worth its salt can afford to do without these data centers. So they spend billions upon billions upon billions of dollars, and they are stocked to the rafters with NVIDIA chips. And then out of nowhere, some Chinese outfit finds a way to do much more with fewer expensive chips, and the whole data center world is turned asunder. Some data center builders plant seeds of doubt about the need for all this hardware capacity from NVIDIA. Suddenly, the data center feels fragile. The tech titans, Amazon, Alphabet, Meta, Oracle, Microsoft, throw in Tesla, have been dependent on this data center and the spend. A whole swath of industrials like Cummins for motors, backup, Constellation Energy, Vistra for nuclear power, Vertiv for the guts of the data center. They've all been trading together. They're linked and they're hanging in the balance. We know that what's happening is we know what's happening. Why? Because every member of the Magnificent Seven, save one, Apple, are drooping because they may have spent too much money on data centers. The fact that Apple hangs in there is actually proof positive. The data center is what's on the line, because Apple's the only one that hasn't spent fortunes paying NVIDIA for the lifeblood of the AI platform. They always figured they could just license from the technology for somebody else, given their massive user base. Yes, Apple didn't have to spend tens of billions of dollars in these warehouses full of servers, so its stock hangs in, irrespective of potential tariffs from Chinese components, which seem kind of, at least Taiwanese components too. It seems like if the punitive government of China also goes after them, well, anyway, the President Trump has so far been okay. He has not hurt them. But then again, they did commit to a lot of money, didn't they? But let's go back to what's in balance, or I should say in the crosshairs. It's not really Apple or Microsoft or Amazon or Alphabet or Meta or Tesla. It's the odd man out of the Magnificent Seven. It's NVIDIA, the most important stock in this entire stock market. NVIDIA. NVIDIA holds the key to countless tech companies, not just those majors, but to Arista Networks, Marvell Technology, Cadence, Synopsys, so many others. Plus, NVIDIA now might be hurt by the President of the United States, who wants to tighten Chinese export controls further. The most exposed group might be semiconductor capital equipment players, with NVIDIA being the most visible potential casualty. Some are going to so far as to say that NVIDIA holds the key to the fortunes of big momentum stocks like Palantir, like Apple, and ServiceNow, and even Bitcoin. Can you imagine? And tomorrow evening, NVIDIA reports. So right now, I think we have two markets. There's the market that's dependent on NVIDIA and its fellow tech titans. And then there's everything else, the drug makers, retailers, consumer products companies, even the one-scorned food stocks and the bedraggled home builders. Now, you might want to take a page from Lincoln and say that a house divided cannot stand. That's why the selling in NVIDIA world is so vicious. To the sellers, it can be only one victor, and they think it's not going to be the data centers. Not only that, but these sellers have equal scorn for the frothy momentum stocks. All of these ancillary data plays, like the fanciful nuclear companies that were supposed to win because the data centers are putting too much pressure on the power grid, or the quantum computing plays that are all about finding the post-NVIDIA computing play, even if it takes 20 or 30 years. Not a great investing timeline. In the end, though, I don't think things are nearly as binary as it seems. The house is not divided against itself. 24 hours from now, we'll know if NVIDIA is selling a lot of product or if it can't, because it can't make it fast enough. We'll know if it's possible that it has more large customers than just the tech titans. So we can stop counting those dollars. We'll know if it can avoid making chips for China entirely, so that that's not a concern. Be taken off the table. We'll know these things to be self-evident, including all the orders. And then, after we know that, life will go on.
Despite the recent holding pattern, analysts are still generally enthusiastic about Nvidia's stock. The 68 analysts that FactSet tracks have an average price target of $175, which represents a 38% increase over Nvidia's share price on Tuesday. With a price target of $190, Bank of America analysts lead by Vivek Arya, one of the most vocal Nvidia bulls on Wall Street, forecasts that Wednesday's earnings call could mark the trough in investor sentiment. Nvidia's eagerly anticipated earnings on Wednesday, which are regarded as a gauge of demand for AI chips, may mark a turning point for the AI stocks that have propelled the market's upward trajectory over the past 2 years. The so-called Magnificent Seven, a collection of tech heavyweights that includes Nvidia, Microsoft, and manufacturer Tesla, have reaped significant rewards from the AI boom, which has mostly benefited investors. Despite rising skepticism about the equity's exorbitant valuations and whether the billions of dollars invested would result in meaningful returns, that boom continued. These worries have gained attention in the past month as IT firms appear to be planning to reduce their expenditures on data centers. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
So when you think about Nvidia, the stock really hasn't traded well into the print, which is unusual in and of itself. But how do you see it today?
No, in September when they came out with that bad earnings report, I valued them about $90 before the election, before the market downturn, and they were trading at 108. Today they're trading at 128. So in terms of perspective, even with the beating they've taken in the last few weeks, the stock is still $20 higher than it was in September of 2024. So I think that at that time I said the stock is a great company, but I don't see how you can get to $120, $130 per share.
Still?
No, I think that's still, what I said then will still hold. They don't have the capacity in terms of generating earnings and cash flows to sustain a $3 trillion market cap. So I think that still stands. And I think as the earnings report comes out tomorrow, my expectation is going to be a lot like September, a replay of September, where they will beat analyst expectations, but the market's going to be disappointed because the market seems to have set expectations higher than what analysts are seeing for the company.
But they would say, Professor, have you seen the CapEx numbers of these hyperscalers, what they say they're going to spend? And a large part of that, if not the majority, is going to go to us. Yeah. And we know that it is. And you pay a little bit more for future growth like we're going to give you where you can't get anywhere else.
Now, if you back out from the market cap, what their break even has to be in terms of revenues, it's about $500 billion in revenues. So even if you bring in all of the spending by Meta and Microsoft, that still gets you to maybe $300 billion, $350 billion. The market is actually building in a surplus over and above that of other people coming into the game and spending immense amounts. So this is not a question of, people are spending more than expected. That CapEx spending was already there in September. It scaled up. With DeepSeek, the question is, are there other people who might have entered the game who are not going to enter the game now because their response is, I don't need those NVIDIA chips. For what I'm doing, I can get there with much cheaper chips.
You think that's a new risk? Have you been thinking about it differently since the DeepSeek day?
No, in fact, I revalued it right after the DeepSeek.
You did? You think it's that profound of a change?
My value dropped by about $10 because, in my view, what it does is it reduces the total size of the segment of the AI market that needs high-powered chips. and immense amounts of data. Because whether DeepSeek is a fake or whether it's going to pass by, what it opened people's eyes to, not all AI products and services need these incredibly powerful chips and huge amounts of data and huge data centers, that you can get there with much cheaper devices. And I think for many companies, when they look at the AI products and services they have to develop, they don't need this high-powered stuff. They don't need to spend the tens of billions of dollars up front. So I think that's the real worry you have to have as an NVIDIA investor, is whether those people will now hold back and buy cheaper chips and build cheaper centers.
Did you, at the same time, while downgrading, for lack of a better word, NVIDIA, did you upgrade something else?
Not yet, because I think what this is going to do is it's going to commoditize the product and service business. The AI product, we're all going to see more AI stuff because it's going to be cheaper and easier to deliver it. But I'm not sure any of us is going to be willing to pay for most of this stuff, because I look at the AI stuff that I'm being offered as a consumer, and my reaction, it's neat, it's cute, but I'm not paying $5 a month or $10 a month. It's different, I think, in the business AI segment. That's where the NVIDIA chips and the big data will continue to prosper. I don't see anybody benefiting from the commoditizing of the rest of the AI business, because it's going to be free stuff that everybody gets and nobody's able to make money off.
Many of the equities have experienced significant declines from their late 2024 peaks, with Tesla seeing a 37% decline from its December peak. Microsoft terminated certain data center leases, according to an analyst report, which further shook the equities this week. Concerns over the low price of China's DeepSeek have caused Nvidia's shares to drop by about 6% during that time. However, according to LSEG statistics, Nvidia has saved the market by exceeding projections for both revenue and earnings per share for each of the last 8 quarters. This week, Nvidia has the difficult chore of improving market sentiment. According to Swissquote bank market analyst Ipek Oskardeskaya, if it doesn't, the stock sell-off may quicken. Nvidia bears the burden of hopes. In pre-market trading on Wednesday, the stock increased 2.6%, rescuing the chip industry and stock index futures from a sell-off triggered by a gloomy consumer confidence survey. Since ChatGPT's November 2022 launch, which was heralded as AI's iPhone moment, the second most valuable firm in the world, Nvidia has benefited the most from Wall Street's picks and shovels AI trade, adding almost $2.7 trillion in market value. The company is now the leader of the Mag 7 after experiencing a nearly 1,800% increase in the last 5 years. The benchmark S&P 500 has increased by roughly 65% during that time, while those stocks have, on average, more than tripled. In 2025, those stocks have faltered thus far. The overall index has barely increased by 1%, with the Mag 7 down roughly 4.5% and the remainder of the S&P 500 up roughly 4.4%. According to analytics tool Oratz, options predict a 7.7% swing for shares of the AI bellwether in either direction following the results, which is consistent with the stock's average move of 7.6% over the previous 12 quarters on the day after results. Nvidia stock is trading at a smaller premium despite its ferocious surge because earnings projections have increased more quickly than the share price. According to LSEG statistics, the company is currently trading at roughly 28 times projected earnings, down from 36 a year ago, and a peak of over 80 in June 2023. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.